Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, November 6th at about 1:15 p.m. Eastern. Well, the U.S. economy created the fewest jobs in 5 months in October, and more Americans are working part-time. Non-farm payrolls did increase by 638,000 jobs last month, after rising by 672,000 in September, so that's good news. So let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was way up here, trading at $350.26, which is about 35.02 on the S&P 500 itself. Now, since it made this new all-time closing high on September 2nd at $357.70, it slid south after that, as you all know, came down to a low here, slid below the green line, the 50-day moving average, below the red line, the 20-day moving average, came down here to about 320, then rallied back up again, back up to these, up to about 350 in mid-October, then fell back down again. So you see what it's doing now. While it was in an uptrend before, from March on, making higher lows and higher highs, after it made that September 2nd high at 357.70, then it went into, I don't know mode, and now we're back up here to almost to this prior I'm going to call it mid W high right here, back up again today at 350, now. So it's trading in a range now between 320 and we're going to just call it here about 350. So please know that when the market is in an uptrend, you'll see higher lows and higher highs. When a market is trading horizontally, usually you'll see it trading in a range with reasonably well-defined support at the bottom of the range and resistance at the top of the range. So please know that price corrects through time and price. Price corrects through time and price. Right now it's correcting through time. If it were to start down, it would be correcting through price. Okay, so it corrected through price here. It corrected through price here. It also corrects by moving sideways. So that's what we've got going on here, this trading in a range. Now, if the SPY can climb higher from here, remember November, December, January are typically the best trading months of the year. And so, you know, if it can go up and move over that past high at about 358 and keep going, well, fantastic. If it can't do that, then if it starts down and breaks 320 here, then, and of course back down below the 200-day moving average at 312 would not be very cool, then we would have a triple top here. A triple top is a top formation pattern that, and if that were to happen, we could see the SPY move down, make a measured move, not all at one time, but make a measured move down to approximately 280, 281. You measure it by taking the low here, the high here, measure, see what that is, and then take that down one step. So if it were to fall below 320, and especially this 200-day moving average, we could have another leg lower. But don't fear, it wouldn't be going down all at once. But again, we may move up to highs, and we may just keep trading in a range here. Who knows? What with election results, coronavirus, and expectations around a future stimulus, the market's going to have a lot to digest in the coming week. So please trade wisely. Please make sure your protective stops are in. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This QQQ represents the NASDAQ 100. As you all know, it's a major index in the market. And the top holdings are Apple, Amazon, Alphabet, and Facebook. Now, when I captured this chart today, the QQQ was trading at $294.71. Now, it too made an all-time closing high on September 2nd at $302.76. Then it corrected through price, because after it rises, it's got to either go sideways or come down to start correcting a little bit. That's just what price does. So then it came down to 260, then rallied back up over the 50-day moving average and the 20-day. Rallied up to October the 12th here and to about 298. So we can take into consideration that this is a lower high. Remember, we want higher lows and higher highs for an uptrend. And when we see a lower high, we have to pay attention. Excuse me, guys. It slid down to 260, then back up. Then it moved back down here to about 262. So it did make a higher low here. So we could maybe see a triangle coming into place here. If the QQQ can move back up and go back up to its prior high to 303 and go over it, then this prior uptrend continues. If it can't do that, if it starts falling from this 294, 295 area it's from now, if it moves back down below 260 or 261, then we could possibly see kind of a triple top here, pretty close to one, or we could at least see a move down that could take it all the way down to 230, 220. But again, that would not be a straight move down. If it did so, it would move down here. It could fall down toward 230, 220. But again, that probably wouldn't be in one stroke, and it could go higher and it could continue trading in a range. So this is kind of an area we've got to wait and see. So again, please trade wisely and please trade what you see, not what you think will happen. Okay, let's go on to our final chart today. Our final chart today is the VanEck Vector Steel ETF daily chart. The symbol is SLX. It has 24 holdings. The top holdings are Vale, Rio Tinto, Worthington Industries, and Cleveland Cliffs. Now, when I captured this chart, price was trading at $34.02. It is trading above its 50 and 20-day moving averages. Now, in case you're curious and you can't see it on this chart, the SLX made an all-time high in the year 2008. Actually, it was May 2008 at about $113. So, as you can probably guess, since 2008, it gradually over time, moving in cycles, as price always does, gradually moved down. Now, it has, after making a relative high up here in February, it was trading at about 31. It then moved down to these lows here at 18. Since then, it has rallied and it moved up, then dipped down, then kept going. And then once it got above the 50-day moving average, the SLX kept going very nicely. So you can see on this chart that when a stock's in an uptrend, it's really nice to be able to use the 50-day moving average as your measurement point, even using it to place your stops. What I do when price starts to get a little iffy like this, I say, okay, if it makes 2 consecutive closes below the 50-day moving average, I'll get out. And it didn't do that in either case right here that you see in September. And then again at the end of October. It cut it close, but it didn't do that. Now, however, the SLX, again, is moving higher here. If it can remain positive into the coming week, and if it can stay above the 50-day moving average, I may add shares of the SLX to my portfolio. I'm going to place my initial stop pretty tight down here at 31.50, and that's below the 50-day moving average. Now, if or when the SLX breaks up here to over 36, I may add extra shares to my portfolio. And of course, before that, I will turn my stop. If it starts breaking out here, I will turn my stop into a trailing stop. So you may want to keep an eye on the SLX during the coming week. And now, on to final thoughts. But before we do that, please know that if you'd like to become a more successful trader, this is the perfect time to check out my trader training programs. You will love my simple yet powerful strategies devoted to swing trading, trend trading, bottom fishing, all kinds of strategies, because they will help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen or click on the orange button below. And now on for final thoughts, you might want to ask yourself this: would I hire myself to be my own money manager? And if I've done that, how am I measuring up? Am I responsible and disciplined? And am I protecting my capital at all times? Very important, people, protecting our capital at all times. And if you want, you can continue the question with more questions. Maybe you ask, do I look at my statement at the end of the month and compare it to last month's statement to see how I'm doing? Do I make sure that when the market's in a downtrend, I stay defensive, and when it's trading in an uptrend, that I take advantage of it? All those things are something to think about. Now, be careful when you ask yourself these questions that you do not give yourself accusatory answers. This is not for you to get mad at yourself. Instead, use these questions to establish thought-provoking guidelines for improvement. Please know that your financial future is your responsibility, and there is no better time than the present to develop a plan to raise your skill level and to ensure you are the best manager of your money and your stock market success. Finally, if you want to become a consistently winning trader, again, check out our easy-to-learn yet powerful online trading programs that will help you increase your trading profits from now on. From swing trading to bottom fishing, trend trading, and more, just click on the button below for more information. Till next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.